No one can predict how long inflation will persist, exactly when and how much interest rates will rise, or whether matters in the Ukraine will get better or far worse. These unknowables, of course, don't stop the financial media from foisting upon us prognostications about how the market will react. Now, while we can't predict the future, we can look at the past to gain some insights into what's probable. In our post from May 17th, 2021, How Do I Protect My Portfolio Against Inflation? Our advice was to stick with a broadly diversified portfolio which aligns with your plans. The reasoning's pretty simple. There's simply no asset class that can be relied upon to move with inflation and beat inflation over the short term. For example, I'm sure you've seen pitchmen on TV touting gold as a haven against inflation and political turmoil. Well, we've had both those things since May in a big way, but gold prices barely moved. Inflation usually cools as interest rates rise, and as usual, the media is full of negativity with claims that rising rates are going to kill bonds and stocks. History shows that's not exactly true. Stocks should always be expected to be volatile, but it's important to note that stocks have usually risen during periods of rising rates. And experiencing dramatic declines in the value of bonds, well, that's a voluntary activity. All you must do is own long-term bonds. And when rates rise, long-term bond values tumble. Short-term bonds, well, they're far steadier. Now, the invasion of the Ukraine by Russia is distressing and troubling on many levels. There's no doubt about it. Focusing on what we can control has paid off in crisis after crisis, and it probably will this time too. We believe remaining diversified, disciplined, and patient is a sound course of action, and that being resilient will once again do better than trying to be nimble. Invest, don't speculate. Now, we've got a lot more on all of this in the post titled Inflation, Interest Rates, Putin, and Your Portfolio. We go into more depth on market behavior with respect to inflation, higher interest rates, and past geopolitical events. It's a pretty easy read, but as always, if you have questions, please contact us. We would love to hear from you.